Alright, can you guys hear me? And alright, can you guys hear me? And thank you, Justin. This is messing me up because this is on a different screen. Alright, can you guys
says Barkin says the labour market is quite tight.
Thank you, Justin. To do this is messing me up because this is on a different screen. Alright, can you guys
says Barkin says the labour market is quite tight.
Thank you, Justin. To do this is messing me up because this is on a different screen. Alright, can you guys
says Barkin says the labour market is quite tight.
And this OBS is broadcasting thing. Alright, you guys.
Says Barkin says the labour market is quite tight.
And this OBS is broadcasting thing. Alright, you guys.
Says Barkin says the labour market is quite tight.
And this OBS is broadcasting thing. Alright, you guys.
Says Barkin says the labour market is quite tight.
And this OBS is broadcasting thing. Alright, you guys.
Says Barkin says the labour market is quite tight.
See if I can see it. Alright, it should be alright there. If the audio gets too loud, let me know.
So just seeing from a reporter via Twitter,
I got my
citing
internal
colleague,
volume down.
citing one of their colleagues,
YouTube
says top Republican negotiator Graves states they don't have plans to return to the White House on the debt ceiling. Quotes that we've made clear that we're willing to meet any time to get this resolved, and I think, you know, we began seeing a little bit of movement yesterday.
Alright, I guess I'm gonna have to deal with it. Let me text Bruce real quick. Give me a second here. I texted Bruce, see if he hops on. Alright, so you guys should be able to hear me in Discord as well.
Fed's Barkin says the US is years behind on training workers for skilled trades. Labour demand in skilled trades still crazy hot.
Discord. Alright, hang on guys, just trying to get this set up. Alright, so right now I'm currently got dueling positions on in Q and ES. I'm short NQ and long ES, which is not preferable, but you know,
So Fitch Ratings commenting on European LNG imports says it expects further increase in LNG purchases to 155 BCM in 2023 after the 45 BCM year-over-year increase to 120 BCM last year.
Actually, I don't have my stops in, so give me a second here. And I actually have to do the disclaimer here too, so give me a second. I'm going to play this disclaimer.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in Wholesale Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly.
First as the deadline for the ceiling.
Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade within it for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy this spreadsheet and enter in your own values and use mine to confirm the zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade.
Risk disclosure statement. There are risks of loss of trading stocks, ES, commodity futures, derivatives, options, forex, and cryptocurrencies. This recommendation never investors should consider.
Sorry about that. All right. So Bruce just tried calling me and I couldn't pick it up. So hold on a second. I do have to put on these stops. I'm long ES, so this looks like it's about to stop out here. Let me see what the price is here.
NQ Iceberg sell NQ 151 contracts.
Everything is firing off at one time. So
Weak stocks stop sells EW 255 contracts.
Get all this stuff in. Just bear with me here for a second.
Crude stocks stop sell CL 254 contracts.
All right, crude's going ballistic. Gold was going ballistic earlier. These equities are all over the place. So, I'm gonna find my drawer. This is literally just really screwed me up because I'm never on this screen, so I'm gonna keep going back to this original screen that I've done about 500 webinars. So just bear with me. So anyway, I'm long. I got long ES on. This is a important inflection zone. So there are a couple different setups here. This is the last one here, the sell ice, and I got long aggressively out of here, and right around 49.75. It's coming back. My stop's at 33.75, so that looks like it may be stopped out. But I'm also short Nasdaq. A bunch of sell ice came in right at the open here. This is a huge zone, but you know, the way we trade these areas is you don't change your stop price. You just adjust your size based on the size of the zone. So this was like literally a 62-point zone. I got to get Bruce on the line. I cannot do this on this screen. This is driving me crazy. So, because the current volatility, when I put this trade on, I was risking 111 points. Well, that's just what the volatility is telling me I have to trade with the zone size. So again, the market respects. It doesn't care what I want to risk on a trade. It cares about volatility and the volume event. So based on the zone prices that I put in my spreadsheet, it's telling me I have to risk 11 points. Well, I just adjust my size.
Yeah, can you hear me?
Yeah, I can hear you now.
Okay, so I'm in Discord here. Everything looks good. I mean, you're on YouTube.
No, I know, but the problem is I'm on a different screen, and it's completely screwing me up because I'm never on the screen, so I keep going down to my original screen. I have other things on this screen. It's like I don't know how to switch the OBS to this other screen, and it's really driving me crazy. And it's
okay.
Just
All
really
right,
throwing me
hold
off
on a
here.
minute here.
I'm clicking on display capture, and it's not giving me any options to switch screens.
So yeah, you need to hit the plus tab in the lower left there, for sources, and then you use it. You find another monitor, and then you choose that.
I don't see find another monitor.
Or do you? So, how many monitors do you have on there?
I don't even see my monitor
maybe
options. I just see the screen that it's on.
Okay, no, it should say display capture somewhere, right? Okay. And that is displaying at the moment, right?
Right, but do I hit create new?
So yeah, so down in the lower left-hand corner, click on this add source plus tab, and then you're going to select another monitor.
I don't see add source. I have when I
can you show your OBS? Maybe slide it over.
Well, this is what
sorry, everybody.
For that. Gosh, this is driving me nuts.
I guess it doesn't show your OBS on here. Interesting.
No,
okay.
that's just here. That's the pop-up. Hold on. So this is what I'm seeing here. gosh.
Fed bar
Ah,
says
okay,
demand,
so yeah,
demand cooling as
is that the right
credit
display
tightening.
that you selected? Okay, there you go. There's your OBS. So bring it down.
Right.
I need to see more of it. Yeah, there you go. I need to see more of it. Yeah, there you go. Okay,
It's
so
'cause you're
now,
delayed. That's right. It's there. It's just delayed.
no.
So here's display
Oh, yeah,
capture.
maybe.
Right.
Okay. So there's a plus tab in that lower left corner,
Right. I hit that, and where are the
and then hit display capture.
right?
Okay,
Then
and then
what?
now choose
US
one.
Deputy Treasury
do you
Secretary
mean
Adi
choose
Yemen
one?
says we are making progress in debt ceiling negotiations.
I see. Okay. Well, maybe go over. So cancel this.
Or if I hit add existing, I don't.
And yeah, so yeah, just hit the trash can on that one. Okay. Yeah. All right. So now nothing is displaying. So now go to the monitor that you want.
Okay. But I don't.
And try it again.
What
That,
do you mean?
that plus tab.
What do you mean? Go to the monitor that I want. How do I?
Well, yeah, bring the OBS over to the monitor that you want there.
Oh, I see what you're saying. Hold on. I don't think that's it though, because this OBS wasn't on the original monitor that I had.
So you have another source there, so you can cancel out of that. Yeah.
This
Okay, does
OBS
it
is
allow you to
literally just a huge pain in the ass. Pardon my language. I can't throw this away now.
Okay.
So, well, go back to the
Ted Sparkin says data on productivity has
the
been
monitor
moving the
that
wrong way.
you
Much
want
is
to.
unknown about COVID's
So
impact.
I have this on the monitor that I want. Like I have the OBS here.
Okay.
Let me see. Let me try this. See, this just keeps showing this other monitor. Oh wait, here we go. This might be it. Hold on a second. This was not showing before. It's naming the monitors, and I don't know which one this is. It's definitely a Dell.
Looking now to the fear and greed index,
That might work.
currently
Let's
sitting at
see here.
63 out of 100. That indicates greed, while the crypto
No,
fear
it's
and
not
greed
that one.
index is at 51 out of 100, which indicates a neutral.
This is a good webinar for everyone. See how I.
Yeah, I mean, I'm sorry because I don't want to cancel the stream. We'll have to create a new
Hold on, this might work here. Okay, I think I got it. Hold on here. Let me know. Yeah, that should work. I think I got it now.
Okay.
Oh, goodness gracious. All right. So you see my YouTube? Actually, do you see my... It's going to be a delay, but do you see my spreadsheet?
Yeah. Now I see YouTube.
Okay. And now you see the spreadsheet?
Yeah. Now I see the spreadsheet.
Okay, now I'm on the right one. All right.
Okay. Okay. I think you're all set then.
Easy peasy.
There you go.
That was confusing. All right. I just couldn't do it because I can't go back and forth and not
US
know where I'm
Treasury
at. So, all
Secretary
right.
Adi
Thank
Yemen
you.
says
I understand your challenge.
$50 extra on debt limit
All right.
strains.
Okay. So quickly,
I'm
guys.
sorry. I just got to get my shots in while I can.
Yeah.
That's all.
See what happens when you don't come on the webinars anymore? You're probably sitting there, you're watching
I know.
like Netflix right now instead of being on webinars. That's what you're doing.
Life is a lot better over here.
All right. Thank you.
No, excellent, Scott. Okay, well, let me know if you need help with anything else.
Okay, thanks. All right,
Okay,
so
bye.
while that debacle was happening, there was some sell ICR and NASDAQ, so I'm currently short NASDAQ.
Places that are most stressed
We'll
in
go
the
over that here in a
CRE
second, but I
space
can
is
now draw
larger
this
downtown
current zone
buildings, and there's
and
a lot of pain in that
trail my
space.
stop to this most recent volume event. So, again, a lot of new traders on here. So you have these bubbles, your buy-sell bubbles. You want to remove those. You want to have this last price line. This actually shows traded prices. Gets a little noisy, but it helps you draw the zones. Click on that. Click configure visible components and make sure your last price is checked there. And then what you want to do is incorporate all the prices that happen in this spike here. So this was over 250 sell ice. And that looks like that covered. So you just use your crosshair. Actually, I got to go up here so you can see if I take my crosshair and I cover from the start of the spike, you can see this price is involved. So I need to bring that in and just incorporate all the prices that happen.
Collins, who participates in a fireside chat at the Community College of Rhode Island.
And if this guy's talking, if it's too loud, please tell me. I have my internal volume down to almost nothing, but if for some reason it picks it up at full, and I know how annoying it is. I heard one of my YouTube webinars with this guy talking in my tick strike, and it was really annoying. It's like talks over me. So let me get that up to see what you guys are saying there. Hold on. Should I see something here? All right, so how is the sound? Could you hear this squat guy? Is he overbearing? The guy chirping? Or it's not? Just let me know on YouTube channel, please. All right, so this new zone is 1380.81 down to 71 quarter. So I'm going to put that in the spreadsheet. So this is the spreadsheet we use in my trade room. It's a godsend. You literally just put the zones in, and it tells you every word. Enter, exit. And this is proprietary to my trade room. If you join my trade room, you get access to this. 13.871 quarter. This was not the day to have technical problems because there's just stuff flying off everywhere, and I can't keep up. I was trying to trade the stuff before the webinar, and it's not the day to have technical problems. So I'm totally backwards right now. So just bear with me. All right. So this new zone. So my first stop was, so the way I trade these areas, my first stop was above this volume event here that happened. And there was just waves of sell ice. You can see here there was, right at the open, 274, 256, another 154, so it's 657. So this is almost 800 sell ice right off the bat here. And this was this whopper of a zone. Again, it is what it is. I don't adjust so many traders will get into a short, say they are tracking this stuff, and they get in a short, and they're like, well, I don't want to risk 111 points. I'm going to put my stop right there. And again, this is just right in the middle of this volume event, and these algos will snap this back in here and stop you out. So when I put on my trades, I force the market, aka algos. If I'm going to be wrong, say I get in short here, if I'm going to be wrong, it's got to come back the ATR. It's got to get through the entire volume event and then another ATR for me to be wrong. And this is all from trial and error. Yeah, I don't like risking 111 points on trades, but the volatility and the size of the volume event's telling me this could easily move 111 points the other way in my favor or more. So again, this is where traders get in trouble. They love to have these static stops where every time they trade the ES, they risk 3 points to make 6. And that's just, you're just rolling the dice because these algos, they are designed when nothing's going on, and they can sense when nothing's going on. That's when they start to whipsaw you to death and stop you out of your trades. So I adjust my size based on my risk. And that's the way you need to do it if you want to be successful in this business. If you are putting static stops in, you may get lucky for a while, but it's going to catch up with you. All right, so anyway, my stop for this was way up here. It was an ATR above this zone here. That was this zone here, based on this stuff over here. And then this came in. I just drew this current zone. So now I'm going to bring my stop that was up there, and I'm going to bring it down to here. The problem is I'm going to be now stopping out right in the middle of this zone. So I may move it just outside here. Let's see what that price is. If I were to short this current zone that I put in, my stop would be at 07 quarter. And that's literally like right in the start of this zone. But I'm not gonna. You got to make exceptions sometimes. So I'm not gonna move. A lot of times if I have a zone like that, and say my stop
5
would
minutes
be
away
in the
now
middle of the
to get
zone,
the
well, I'll
EIA
move it out of the
natural gas
zone. But in
change.
this case, I got to move it up
100 BCF on the
60
chart at
points.
99
That's
BCF.
I'll just
As
bite
well,
the
we
bullet if it
expect
comes
comments
back,
from
especially
Fed
because I'm long
Collins,
ES,
who
so one of these is
participates in
going
a
to
fireside
be a
chat
loser.
with the
Basically, have a hedge
Community
on.
College of
I'm not
Rhode
trying to
Island.
do that, but that's
The
what my
text
trading
is
strategy
expected,
shows
as
me.
well as a Q&A.
All right, so
from
7
both
quarters where I'm
moderator
going to put
and
that
the audience.
stop, and we put
We
that
put
in
the link
here
out to the
quickly.
live video on the feed for those interested.
7 quarter.
Representative Gallagher says the trip to Taiwan this weekend has been
That is
postponed.
working. All right, let me change this to color too, just because it gets confusing when these zones are the same color. They blend in together. All right, so those are those 2 events. There is a way I can add to this trade as well. So we have different strategies in my trade room that we're trading that each are assigned an Apex account. So the BARF is always in play. The BARF is just a blind ATR retest failure of any volume event, right? So it's not taking anything else into account. And the whole reason I'm doing that is to show my traders that the volume events are the edge, right? So if this is a profitable trade, which it is over the long run, then you can imagine when you get this information at important areas. And it could be any areas you're looking at. I look at specific areas, but it can be anything that you're looking at. So the point is, whatever you're using, if you're not using this information, you don't have all the information. So I don't care how great of a trader you are, you can be even better, way better, if you understand the real-time volume events. So this could be an event that's happening as something that you look at, a Bollinger Band, a MACD cross, whatever you guys, whatever the 85 things you have on your chart that you find important. You're going to start to realize too why sometimes it worked, why sometimes it doesn't, right? And a lot of traders and a lot of educators just chalk it up to that's just the market, that's just this probability is playing out. Yes, but you're going to start to see when a lot of times when your areas fail, if you start using this information, this SI indicator from Bookmap, you're going to be like, oh, that's why, because there was a bunch of buy ice there and I sold into the buy ice and I didn't realize it, stuff like that, right? So, and that's also, I'm not saying that just because this is sell ice, the market is going down. We have specific strategies and I have specific setups based on if this ice holds, meaning if the sell ice works. It's called a Titanic. These are very technical terms too. Just kidding. They're meant to be memorable and funny. Or if, say, this sell ice comes in. So again, the icebergs are just hidden orders in the order book. So there was a bunch of hidden orders, sell orders here. Well, if they're wrong, then we call that broken ice, and we have a way to trade that as well. So I have 6 distinct setups that I trade now. And again, I keep forgetting to show you guys or get my list, so my contact information. So the bottom line is, if you want to get a hold of me, so this is my website, and there's the store. So this is my main course here, the SI indicator. But on the home page here, everything we talk about today, all the discounts are on here. You get discounts to the Bookmap Global Plus, Apex, we'll go over that, Spot Gamma, the Hero Indicator, you get an extra week, Tick Strike, Trader Sync. So this is all the stuff that I use. But if you go to my room, if you need to get a hold of me,
situation to determine how slowing demand
my email is scott@scottpulcinitrader.com, but there's a way you can get a hold of me through here too. I just don't know where it is at right now. So, but that's my website. I just keep forgetting to put up the page that Bruce used to do with my contact information. All right, so I'm short that. I've trailed my stops, so my risk is very little now. I'm only going to be risking about 20 points if I get stopped out, which I would prefer because I'll lose a little bit there, and I'm long ES. We'll go over these setups. There's been nothing since the open here. So there was a stop run right off the bat. We had 522, that's this yellow zone, and I actually got long off of that aggressively in this inflection zone. So we have zones, we have different types of trading strategies, like I said, and this one is the Izzy trade. So these are areas that I draw based on the 4 important principles of charting, which are tops and bottoms of balance areas, high volume nodes of balance areas, which I don't usually draw those, but there's always usually something right there anyway, like one of the other 3 things. But you can eyeball it too, right? It's not hard to just look at this balance area and say, okay, where did the most trade occur in this balance? So balance is just 2-sided trade, right? Well, where does the most occur? Is it at the tops and the bottoms? No, it's in the middle. right? So that's what's called a high volume.
The US inflation
So
rate is too
those
high,
are important
showing
areas,
signs of easing.
and then directional
Rate pauses
conviction
give space to
like
assess
this, and
actions
then
to
directional
date.
conviction,
Collins says the
even
Fed's
gaps.
monitoring a
Our
wide
directional conviction,
range
so this
of
market
data
gapped all
on
the
the
way up to
economy's
here,
health.
failed in this
Says
zone,
the Fed
not
may be
surprisingly to the exact
nearly
tick, pretty much the very
pointing
top of
towards
the zone.
rate hikes.
And then the other important areas are
Fed
buying and selling
Collins
tails. So
currently speaking
yesterday you had a selling tail, and I thought that was very bearish, and it was. And then Nvidia
Crude
came out.
ice
And
iceberg by CL 151
I
contract.
guess the world was
Nat
okay
gas ice
because of one
iceberg
stock.
sell NG 151
They
contracts.
went absolutely ballistic at the close yesterday. You can see here. I don't know why it's not showing on ES, but it's showing on Nasdaq. But you could see this. Oh, it was showing it earlier. I don't know why it's not showing it now. So anyway, you could see that this market just gapped like just insane off of one stock's earnings. This is nuts, right? So I understand it's a highly weighted stock, but I mean, that's crazy. But you see where it failed in that zone, and now it's trying to hold this zone. So anyway, we have rules for when we get them, just like I got done talking about, when you get a volume event in an important area. Well, we have a distinct trade called the IZZY. It's just short for an inflection zone trade, where if I get a volume event in an important zone, I trade it, right? So that's what that is. So I took this IZZY in ES and I got long. Two different strategies here. I got long the IZZY. And then there was another setup that I'm going to show you here, and then it went ATR retest fail, and I got along that as well. So, so I take that back. So I got long the BARF. So the BARF trades the blind ATR retest failure, right? So that was at the time that was this one here, and it did this.
We have
And
also posted out the
I
weekly
am
EIA natural
working
gas
for it. If it
report
came
on the
back
feed
out
for
of
those
here, that's where I
interested.
get long. So I get long just outside of an ATR. Well, then this new setup came in, and I just let that continue to work. But then I also got long the IZZY trade off of this original event. So I'm not long a BARF off of this event. I was long off of this first event. So I'm long in this area. So these are the two volume setups, and this is the most recent here. This one actually has not gotten. It's gotten the ATR out of here. Here's the retest of this black zone, but it has not moved an ATR back out. So I would not be. I can actually put on another BARF here if this moves out of this zone. So I can have two BARFs on.
Tomorrow
I'm not sure if
afternoon.
I want to do that, but let's see here. So those prices are all in here. I just want to make sure my ATR is correct. This is so important in trading because you're adjusting to the current volatility of the market. So if I want to go long here again, it'd be at 50 quarter. And I could put on 6 base. Remember, I'm not changing. So each trade that I'm putting on, for a $5,000 account, these are these Apex accounts that I'll show you guys in a little bit. I'm risking 10% on these trades. You should not ever be risking 10% on any trade for real money. And I'm going to give you guys an example of something I did the other day, and it completely blew out the account, and to show how easy it is. So. Anyway, for trading a live account, the most you should be risking is 2%, right? So if you were trading a real money $5,000 account, 2%, you should be risking $100 a trade, and this will all adjust for you. But I'm more aggressive with these Apex accounts because I'm trying to get them all qualified, and we're using them again to keep track of the stats. But so based on this risk, I can put on 6 if this comes back to 50 quarter, which it has not come back. So it's basically just bouncing around this last zone here. So I'll eyeball this. If this comes back here, I might put out another BARF trade as well. So long. So I'm long right now, and you can see my prices and my stops at. I got long. This is the prior zone. This actually isn't right, but my stop's right around here. It's like 34 quarter.
Graves says there's no plans for debt limit
Because I haven't traded off this new zone yet, is what I'm saying. So I know that's probably confusing to a lot of you, but we'll keep an eye on that. So I'm short Nasdaq, long ES. Let's see if we can get something real time. There was something in crude that just fired off. This crude is just going crazy today. Let's see where we're at now. I actually had trades on here and I got stopped out right at the start of the webinar, so I was scrambling to get those trades in, the stops in, but anyway, I'm just going to remove all this stuff and let's start fresh since this all happened in the same area. All right, so this, you can see here, this just came in. So 258 buy ice. Okay, does that mean I just automatically get long? Not necessarily, but if the market can show me it can get an ATR out of this zone, then that is, in my based on all the thousands and thousands of these I've seen, that is telling me that this is a bullish event, and then I will trade it to the long side. So that looks like that was that for the zone. 72.20 down to 72.03, and I got a hard stop today as well, guys, at 10:15. So sorry for the shortened webinar today, but I got to take off. All right, so this is 72.20 to 72.03 is your new zone. So before you start trading, you should know exactly where you are on your charts, your longer term, your market profile, and then you're not scrambling to put the zones in, and you're coming back like, where are we? Are we in an important area? I don't know what to do here. Right? You should do all this in your pre-market prep and know exactly what this stuff looks like. So bigger picture, you can see this market opened up and accepted into this market profile composite. This is a multi-day composite. If you see these blue zones, they're multiple value areas merged together that overlap. You can see this composite was for like literally a 14-day composite. Probably a 9-day trading day composite. So this is an important area. The top of this was, and it ripped right through there. So many times the tendencies is when the market accepts into the composite value area is to get to the other side. So this is giving me a bearish view right now. But also many times when the market accepts into it, it will come back, it'll retest the top, and then it'll go move down to the bottom. So we have a new trade in the trade room here. So I'm adding new playbooks every couple weeks. We already have, I don't even think I have this one on the copy. So remember that this isn't the full, I have it right here, the pick trade, Profiles Encouraged. So that's a funny name. It's actually, if you guys know history, that was a book that John F. Kennedy wrote, because we're talking about market profiles. So we named it Pick, Profiles Encouraged. I forgot what I was just going to say here, but what was I just talking about? Oh, I don't have these the actual definitions for all these because this is proprietary to my trade room, right? So again, people come in there and they pay a monthly fee to have access to everything that I'm doing, including all of this and and the spreadsheet and everything else. So, I do these webinars. You guys should be learning a ton on these webinars, but I'm not giving you everything because that's what those subscribers pay for. So if you want to see this on a daily basis and have access to this, join my trade room. Again, that's right here. You go here. Here's the different options. Monthly, quarterly, it's obviously cheaper the longer you go out, and then you get discounts off my courses and mentoring. So that's that. All right, so this current setup, let's see where we are on the bigger picture. I know we were in an Izzy zone earlier, right? So I would trade this as an Izzy trade right now. It's an inflection zone. So this was an important area where this market gapped up. I would also say that's the high volume node of this. Remember, I told you I don't draw high volume nodes, I just eyeball them, but many times things that happen are from the high volume node. Other things, one of the other three important areas. So this is an area where this market could bounce off of the zone, and it's already doing that. So I've got to get this trade in right now before I miss it. So the aggressive entry based on the current ATR. ATR right now is 24.245. 5-minute ATR, I'm using it just a Thinkorswim default. It's a 14-period Wilders. You can put that on your own software, most likely. So I'm in a 72.48 aggressively, and I can put on 7 MCL, which is the mini crude, micro crude. So hold on, what did I say? 48. All right, it's not quite there yet. And that would be the Izzy trade. Let me put that on. Yeah, that on. What did I say? 48. All right. So that's working. What was I just going to tell you guys? I was just going to tell you something I forgot. All right, so then also the BARF trade is obviously in play because they're always in play. So if this this still has not proven to be a bullish setup, what price do we need to make this a bullish setup? Well, that's in the spreadsheet too. So if this gets up to 72.45, which is a full ATR, a current full ATR, so you can see that ATR is 24.5. Well, the top of the zone's at 20, right? So the full ATR is 72.45, rounded up. So that's how I determine from watching so many of these. If this is able to push the ATR out of here, it shows me it's a bullish tendency. So then the ATR retest failure, I will go long. All Alright,
Fitch
so I
ratings
just
for
got
the
stopped
market
out of
line
my
in European
NQ short,
consumer
but I was able
ABS
to
asset
bring
performance
my,
continues.
again, I was able to trail it, so it was just a small loss, and I'm currently
US
long
Treasuries Adeyemo says we are
2
not
different strategies in
decoupling from
ES, and I'm going to
China.
actually add to the BARF trade here too. So I forgot to do that. Let me see here. Hold on. The BARF long was, remember, stay on top of your ATR here. It's 5.59 now. So 50, I could put on 6. So I already have BARF on once. I'm going to put it on again for that new setup that came in that I was telling you about. So why is it okay? 50. So we're right here. Hold on, yes, don't be running away on me. Actually, that was the wrong one.
Adeyemo adds we should not be over-reliant on any one country for supply chains.
That was the wrong account. I do this about 5 times a day. Alright, so that's working. So, just quick overview again. I'm already long the ISI. I showed you the ISI zone. Right, so I was long off of this. I was long 2 strategies off of that, right? I was long the ISI, first move out of there, and then I was long the BARF. My stop was below, an ATR below the zone, which I never got to. Then this came in, the sell ice, and I just did the same thing here. So I added to the ISI when it broke out of there, and then this is the ATR, retest, fail, and now I'm long BARF as well. So I'm long double size on two strategies. What could possibly go wrong there? All right, so I think I just filled on crude. Hold on, somebody is texting me. I think it's from my room. Hold on here. I don't know where that's coming from. Somebody was texting me something. All right, so I long crude as well. I just got filled to the exact tick, which is my MO. Actually, no, it's 51. So long crude, I'm long crude the ISI. We just talked about the ISI. That's the aggressive move out. So I don't wait for retests on ISI because they're such important zones. You'll get the volume event at the zone and the market will just take off. So that's why I don't wait for the conservative entry. For my studies, my estimations, these markets retest the zone 70% of the time. So this move is not surprising me. I didn't want that to happen, obviously. But now the BARF is in play too. Remember the BARF strategy is blind ATR retest failure. So I will go long that as well if this retests the zone and then pops out of here. So I'm already long one strategy in crude and I'll be long another if that comes back. So I'm going to put a little alert here if it does retest because I may not see it and I'll miss it, which happens to me 20 times a day. Hold on here, notifications, and then you get this annoying little chime that comes in. All right.
The same reporter says
So
that
long
House
ES.
Democrats are meeting at noon per 2 sources.
Double strategy or double amounts because there was 2 different events here, and I'm long crude and I will add to the crude long. Let's see what else is going off here. So the nat gas just fired off. So again, you can hear everything firing off, right? Like when shit's hitting the fan, pardon my language, like you're scrambling and remember like what was that? So if you have this up, you can just go back and be like, oh, okay, it's 7:30. This is Pacific time. So at 9:30 Central, crude iceberg, 9:30 Central, and that's what we're trading off of here too, by the way. And there's a nat gas at the nat gas number. So how you get to that is you just get to your main bookmap page here, and then click alerts, file alerts, and then that pops up. So you have the audio.
Nat gas ice iceberg by NG, 153 contracts.
And the digital. All right, let's see what's going on, I guess. So this is why I tell you guys every week, you're doing yourself a disservice if you're just staring at the crappy ES all day long, right? Like these volume events, as long as you know the thresholds, it's all the same stuff. They all do the same stuff because it's all based on volume events. It's based on traders that are invested in areas that we're taking advantage of. When it moves out of there, somebody's wrong. That's what this is. It doesn't matter what market you're trading, right? So especially with this SI indicator, that's obviously only for futures. My head would be spinning if they had this stuff for stocks, but I can't even keep up with the 17 futures markets I watch right now. So, all right, so you can see where are we at on this natural gas. We just heard an event, and I know this is an important inflection zone, right? So a lot of stuff happened here. This gapped up this day. Actually, that was more down here. I should have the zone right there. I didn't draw that zone. I need to do that. Buying tail, I could have that a little higher. This gapped up this day, and here we are. All right, so this is an important zone, inflection zone. As you can see, they're buying the bejesus out of these stocks now. So let's get that up so I could just have an idea what's going on. All right, so I know this is an important zone, so I draw my zone. I don't just jump in along.
Net gas stocks LNG 203 contracts.
Right, so I got a new event right now, so let me turn this off. I have this new market pulse, by the way, is unbelievable. There's so many strategies that I'm going to be coming up with there for that as well. I'm seeing a lot of positive stuff there. We'll bring it up too if it slows down here, and I can go over some examples, real-time examples. I'm sure there's plenty of them today. Just haven't had a chance to watch that aspect of it. Bookmap just keeps coming out with more and more stuff. I'm like a kid in a candy store. It's just unbelievable information that most of the trading world does not have, at least the retail trading world. So you guys have a distinct edge using this stuff, and that's what I keep trying to get across to you. I've been trading for 24 years, and I've never seen anything more powerful than first Bookmap, and then this just made it 100 times more powerful. This information, the SI indicator, and now with the market pulse, like you can see, they have an algorithm with the buying and the selling. And just turn this off, see what this looks like. The only thing I don't like is on the same pane. The other thing too, I want to change these colors because I'm colorblind, and they blend in with the stop runs. So I come here, let's make the negative black. So you can see that my ES longs have to be doing well because you can see them buying the crap out of these stocks. Let me change the... I think they've released this new version, so you guys should all have access to this, but it's awesome. So this market pulse, just quickly, we'll get back to it, hopefully, but where's it at here? There it is. So the way I have these set up, if I have them all for the same, so they have a bunch of different options here. I have volume, pressure, and balance, and then if you open this up over here, you can, I put it on an hour, so every spike is just showing me the heaviest buying or selling for the last hour. If you have it at 5 minutes, which is default, you're going to be seeing a lot of spikes, right? So I want to know what's the most, what am I hitting? So that's the trading period here. So the hour, and then the threshold is showing me if this is at least 70%, it'll draw this little spike with the color. It's at least 70% of the highest or buying or selling in the last hour. That's important information, right? So you can see, you can see when traders are being aggressive. So right now, you can see these sellers have been aggressive this whole time. This last one was a stop run. Let's bring that back up again. I don't like this is all in the same pane, and I've asked them to add another pane because it is a pane, no pun intended. But you can see the spike here was the stop run, but this one wasn't. This one wasn't, and you can see and the incredible sweeps indicator as well comes with global plus. You can see that's where this is happening. So you got sweeps there, that's this selling. You got sell sweeps there, that's this going. Someone tried to sweep it up. It did spike up a little bit. These buyers didn't work out so well for them, and now the sellers come in again and again. So the sellers right now are winning, but we'll find examples if this slows down a little bit. Is like when you see this and the market just kind of spins, and then when it gets out of there, it just rips because these sellers are off sides, right? It's kind of the same stuff we're doing with the SI events. The SI events are my main driver, but I'm going to be having many more strategies with this stuff too. I need a little more time eyeballing it because I just don't add stuff to my trading haphazardly. I need to see many results, kind of like the Ludwig levels. These things is actually, I want to see where we're at in all these markets too. So I talk about these every webinar too. These are the second strongest thing I've ever seen in futures trading as far as support and resistance, and as far as giving you a thesis for the day. So again, you go to her website. That's not on my website. I got to get a banner for her stuff. But anyway, you go in here, you can do the 3-day trial. Say, put in the comments, say you saw it on the Bookmap webinar with Scott, and she has special pricing for you guys. So that's how you get those. I forgot why I was on that tangent. Hold on. What was I showing there? I want to see where we were in NG here. These setups. And then I'll answer some questions here in a second. All right, so really nothing as far as lugs. We're at extreme standard deviation of VWAP. Let's check the relative volume and see if that's heightened, because a lot of times the market, if there's no relative volume coming through, the market bounces. You have these algos that snap it back at these extreme standard deviations of VWAP. So you got to be careful trying to initiate shorts when you're down here. So this is VWAP. This is 1 standard deviation, aka the daily value area, 1.5, 2. So many times if there's not big money coming in,
15 basis
these
points
algos have a
on the
back. So
day.
you got to be very
And 10
careful
minutes away now, so
initiating
we give you
positions.
Kansas City Fed Composite Index.
Blindly
Forecast
in those
minus
areas.
9 on the prior
So
of
this
minus
is-
10,
let's see where
and the
my
Kansas
future gas
City
is
Fed
here.
manufacturing.
So you can
saw
see,
a
like,
prior of
this is a
minus
time
10.
when this market, we call them huggers, when it continues to hug the standard deviation. This is one of them. You see this relative volume? So this is the relative volume. It's on Sierra chart. It's based off of the exact 5-minute period, and I have mine set for the last 30 days. So that's really important information. This tells me the big money is playing in here, right? And this means that when you see this, you can expect this type of move, right? When you see this, then you get this nonsense, right? So this can help you stay out of trouble. You know, if you want to put a trade on and it's a bad time of day and you look over here, you're like, you know what, I'm not even going to mess with this, because unless it's kind of a fade trade where you're doing a scalp or something. But if you're looking for a like extended move, you're not going to get it with this type of volume. You're going to get chop, whipsaw city algos. When you see this, that's when you get the extended moves, right? So this can really help you stay out of trouble, stay out of the whipsaw. So you can see that this has not really gotten even to normal here. I think it's normal, but it's not anything crazy. Let's see here. This is ES, obviously. There you go. See, it's just about normal. So 100% is normal. So we haven't seen it. Pre-market, it was obviously, and this is another thing you can do too to come up with a thesis. When you see this kind of volume, right? This is pre-market, obviously, middle of the night. But if you're sitting here in the middle of the night, this is important. You can see the buyers were aggressive. This is going up. But somebody's obviously on the other side of these trades. So this is like its own independent zone. It's kind of like the SI volume events that we draw. It's the same principles, right? So all these buyers were underwater, and then what happened when it moved out of there? They puked them, right? So now it's back. So this has a very good chance of coming back here, retest, and failing. Because why? Well, imagine you were these buyers overnight, and you had thousands you can trade, and you're buying, and then the market does that. Well, and it does that, and you're holding your breath. Well, what are you saying to yourself? Please come back to this area so I can get the hell out of my trade. So that's what ATR retest, or the retest failure is. When it comes back, these buyers get the hell out. They have their limit orders to get out, and if they don't get filled, then they turn initiative, and then that's the next wave down. So that's the principles behind this. And again, I know all of this because this is how I used to trade when I had thousands of contracts on. When I was wrong, I would sit there and hold my breath. I would have my puke point, and if it didn't get there and it would come back, I would be like, thank you, God, and I would get out of the trade, right? So all my trading setups are not hypothetical setups. They're based off of my personal experience as a large trader and how I used to react to the markets when I was wrong, when I was right, and then back then you can see counterparty as well, and I can see how they would react. So all the stuff, all my setups are based on how the big money and the retail trader reacts at these areas. All right, so this is just doing nothing, just bouncing around here.
Moody's says the US dollar
Crude
dominance
is
will persist
kind of
for
working.
decades despite new
Long
challenges.
crude, 2 setups here, or 2 strategies, I should say. We're in right around 49, so this is just kind of sitting here as well. Let me see if there's any questions in here. If you got questions, throw them in YouTube, please, because that's where I can see this stuff. Hearing a British guy talking, yes, so that's this. Squat box at my room. This is Financial Juice. It's what I use as my news source. You can see the headlines, and then he reads off the headlines. But that's why I was saying, if he's too loud talking over me, let me know, because there's something with this broadcast software that it like amplifies my internal computer volume. So if it's annoying, let me know and I'll turn them off. But you can see there, you get this and you can hear it, and you see the numbers coming out and so on and so forth. See this. Keep an eye on this.
Moody's says we
This is the
expect
edge. I'm not going to really get into this right now, but the point is, there's literally every 5 minutes the last 3 days that McCarthy will come out and say something about that thing. It's usually the same stuff. Oh, I haven't talked yet. Yeah, we're about to talk. Oh, things are looking good. Oh, things are looking bad. It's a joke, and then the market just whipsaws back and forth on the news. It's nuts. But that's trading. You know, the other day I put in a bond trade right before the flash PMI that I didn't know was such a bond mover, and the thing swiped down. This is on one of my webinars. Thing swiped down like 12 ticks and stopped me out to the exact tick, and then went exactly in my favor. Right? It happens all the time.
So 5
The
minutes
point
away now
is,
to get the Kansas
you know, if there's a
City
predetermined
Fed
number, you
index
probably don't want to
forecast
be putting
-9,
on trades
on the
before
prior
numbers because it's new
-10,
information
and
hitting the market.
Kansas City Fed
Right.
manufacturing,
Right,
story prior -21.
All right, so this is the last event here. This is natural gas. There's 203 there. I don't think this was threshold. It might have been now. All right, so I would put this. So this is starting to worry me here with this long, right? So they've been buying these things this entire webinar, and you can see ES is doing nothing. It's spinning in place. That is not a good sign. Usually, when these things are going crazy, I don't know why this is screwed up here. Hold on. I have to restart this. There we go. There's something amiss here, right? Like they keep these things literally since the webinar started. They've basically been buying these things, right? So this is tick strike. Again, discounts on my website for this as well. This is a meter that shows the intensity of the buying from 1 to 15, right? So if you see 15, it's the extreme max buying, and it's just an algorithm. It's based on the size of the orders and the speed of the orders. Bookmap has come up with its own version, which is looking like it's way better. It's called Market Pulse. That's what I was showing you a little bit ago. The thing I love about Bookmap is they actually show you where these spikes occurred. I asked Tick Strike for about 10 years to get that information where you can, because I wanted to see, okay, that's great. I know right now stuff's going on, but I want to see what's the history. What's the history of when everything's at 15? What does the market do after that? And to this day, they don't have that information. Bookmap does, and that's what this is. So you get the audio alerts. So here's ES right here. I'll turn that on.
Feds Collins says the baseline outlook
But
does
then you
not
get it
hold
visually too,
significant economic
right? So
downturn.
this is the key to me. So you can see. Let's see what this looks like. Right. So let's see here. So you can just see. It's just awesome to see, like right here. This is really good information. You could have. These are awesome scalping tools as well. So you see these buyers here. That was the most extreme buying for however long. Remember, this is good. This is showing the most extreme buying or selling for the last hour period. Looking back, these buyers got aggressive immediately off sides. What happened? Boom, 20 points, right? And then the sellers got aggressive here. They held, got aggressive here. They held, moved a little lower. Now it's back here. There was a little buying here. They were wrong. So now it's pretty much choppy here, but you're going to see, you'll see, I'll find a bunch of instances if I get a chance today where you see like a bunch of these spikes and they're wrong, and then the minute it gets like a tick out of there, it just rips, right? Just, again, think about it if it's you. Say you're this aggressive seller and like you sell, and the market does nothing, and then the minute it gets out of there, well, you're puking out your trade, right? I'm not saying these are worthy of trying to catch like 20, 30 points, but you can definitely scalp off of them. And I know so many you want to scalp so bad against these algos, which is really hard. Like I've told you guys many times before, that's how I made millions of dollars. And if I'm not scalping anymore, that might tell you something. If I can scalp, I would be doing it in a heartbeat. So you want to be careful with the scalp. You want to try for multiples of your trades is what I'm trying to tell you guys. All right. So anyway, this is not part of my trade plan, right? I'm not bailing on this trade, but I'm just giving you, I'm compiling information. So if I do get stopped out of these out of these longs, because I know that they've been buying this stuff for an hour and the market's not going anywhere. So that's telling me warning Will Robinson, right? So doesn't mean I'm doing anything differently. My stops are below these volume events. If I get stopped out, I get stopped out. I'm not changing my rules because of that. But if this thing starts to break and I get a volume set up to the short side, I might trade it bigger because I already know what didn't happen. They were buying these like crazy. It didn't. It just spun in place like it's doing right now. I get a short set up. It's like, okay, I'll get stopped out, but now I'm going double size to the downside. You know what I'm saying? And I know we talked about the risk, but you can still trade. So I told you guys that I studied when I got back in the business in 2017. I studied. I was going to study with S&B trading. I was going to trade stocks, right? So they literally make their traders come up with A+ setups, and they have to trade them bigger or they get grounded for the day. So there's a way to trade these. So like I told you, your max size should be 2% on an individual trade. The most you should lose in a day is 0.06, right? Or 6%. You should not be. That's the dummy alert on my spreadsheet. So you should not be losing more than 6% on a day. But if you love a trade or you love the thesis and everything's lining up, you can trade 4%. You could trade 6%. If you trade 6% and you're wrong, you're done for the day. You got to be able to shut it off and move on, right? Because there's going to be days that just don't make sense. So like Monday, back to the risk reward stuff, I had this the Izzy trade. I qualified for the Apex. We haven't gotten into that yet. That's this stuff here. So I had a live account on this. I'm trying to make all these live. So every one of these are Apex accounts that we're keeping track of the stats and trying to go live on. They'll all be live eventually because I know they will because I have the edge, right? The point is Izzy qualified immediately. And I did the smaller one. I did the 50,000, which is
manufacturing index.
I don't like how they say it's 50,000. You don't get to risk 50,000. You get to risk $2,500, right? Which is fine. You're still back, but it's just not 50 grand. So anyway, I had this account up. I qualified. I hit the profit goal of 3,000, and I got the live account. And so then you start at the 50,000, you can lose 47 down to 47.5. Well, they have a trailing stop here up to a certain point for the live, and I was up $2,500. This was just last week. I was up $2,500, which is like 10R. I was only risking 10, which was still too much for a live account, but I was risking $250 a trade, right? Well, on Monday, was it Monday or Tuesday? Might have been Tuesday. It was this day here in the S, and it was such a weird day, and then we kept coming through my Izzy zones here. Here we go. It was this day here. This is when there was like 7,000 or 27,000 sell ice. That's what this red zone is. But it was such a hard day to trade and watch, right? So we opened up, sat there, did nothing for 2 hours. Then heavy volume, breaks down, went right through my Izzy zone, I think I had Izzy long here, it blew me out. So then it did this, sat there for another half hour, another leg down, sat there for another 45 minutes, another leg down, like through these Izzy zones, which almost always they bounce, especially to the long side and equities. The bottom line is, this was a tough day to watch because then you would get run over and then it would just sit there for 45 minutes, right? And then the point is I was putting on these trades and I took loss. I had that bond error that I told you. I traded into the number. I had another mistake. Well, that day alone, so we're talking about having a amount of risk. Well, you should not be risking more than 6% of your trade. Well, I lost that day $1,700 out of the $2,500. And then then the next day I blew out of the account. So that's how easy. I'm not happy that happened, but I'm happy that my room got to see that happen because it shows you how easy it is to blow out your account if you are not respecting your loss rules, right? It's just you're going to have a day that just doesn't make sense. You go on tilt, right? And I went a little bit on tilt because things were just really annoying me and not making sense, right? So I lost $1,700 out of $2,500. You can't lose 70% of your account in a day. You're done. It's going to catch up with you. So that's why I keep telling you guys every webinar for 4 years, this is the most important, controlling your risk on your trades. So that sucked. I blew that account out and I deserved it, but at least my room got to see how easy it is that stuff can happen. Because, guys, these are markets. There's going to be days that it just does not make sense. Like that, I called it, as an outside day. That was probably a 5% day out of 95 to 5. It doesn't matter. I still blew out the account because of it, right? So you've got to protect yourself on days that, one, either mentally you're not there, or the markets are just not making sense, so on and so forth, because they're going to happen. So once again, learn from my mistakes. That's why I do these webinars. That's why I have a trade room, to teach you guys so you don't have to sit there for 23 years, 24 years going through the trials and tribulations that I have. You can learn not to do the bad stuff right now and fast track it, right? That's the whole point. All right, so speaking of crappy markets, this is just, again, these things are going nuts and this market just will not go up, and that's not boding well for my long, but we'll see. All right, so let's see what's going on in crude here. This market's doing the same thing, and the thing was going ape shit, pardon my language, as my grandpa used to say, and then I get in it and it sits and spins for 45 minutes and counting. Speaking of which, I only got about 10 more minutes on this webinar, guys, so sorry, I got an appointment. Anyway, I got long basically right here, and it's doing nothing. Let's look at market pulse, see what's going on here. So throw in your questions. You guys have got any questions? Let's see here. Does the direction of the volume event affect which side you're likely to take the ATR play? No, I use the ATR to tell me which way I want to play, right? So when I get the volume event, if the market can push whatever way it pushes the ATR out of the volume event, that tells me which way I want to take the trade, right? And if it goes the other way, so for instance, this has obviously gotten an ATR out of here. That's why I went long based on my strategies. Well, if this fails, say, and then moves an ATR out of the zone the other way, will I take a short? No. The opposing side is invalidated once it gets the ATR out of there. It's just my rules from watching about 10 million of these things, right? So I don't just jump in at volume events. I wait to see how the market reacts to the volume event, right? That's what the whole point is. Like, just because you see buy ice, it doesn't mean the thing's going to rip up. Yes, it has a higher percentage because this is the big money, and the big money runs the show, right? But it doesn't mean they're always right, and when they're wrong, it causes the same kind of effect where the market just rips from that area. So I demand the market to show me you can get an ATR away from the volume event for me to trade in that direction. Then I have two different entries. I either get in aggressively like I did here in an IZZY, or I wait for the conservative where you get the ATR retest failure. And you can see this has never retested this zone for that one strategy, the bar strategy. I'm already in the aggressive strategy, but I didn't get the ATR retest. But this also helps you mentally, like I said. If you know these zones, I know these zones retest at least 70% of the time. You know, sometimes we have a strategy for this in my trading room. It's on this spreadsheet. It's called the ATR reversion strategy. A lot of people are trading these. This is a incredible strategy too. What is this? This is playing for the move back to the volume event because it happens. It's ridiculous, and it's like yesterday happened like 15 times, right? Like one ATR back to the zone, one ATR back to the zone, two ATR back to the zone. So my point is, yes, I have a trade for that. I can't keep up with it by hand right now because I'm doing all these trading strategies. But you're not going to flip out when you start to get whipsawed because you just know, oh yeah, okay, it's very likely to come back there. Okay, you guys can do what you want, play your games, and I'm just going to sit in this trade. This is why I force these markets to come back the ATR, get through the volume event, and then you can show me you can push an ATR outside of the volume event, then you win. I'm wrong, right? All right, so these are still going crazy. Let's see if ES has moved 1 point out of that area. Hey, what do you know? Ridiculous. I mean, seriously. Normal days, this market should be, the way these have been going crazy, 20 points higher. So I am keeping this in mind as this comes to important areas. I am going to be piecing out of this trade because I still don't feel good about these longs here. Let's see here. Oops, that's on the screen. Yeah, that's my whopping. I got on a 50, so I got a whopping 5 points. It feels like this market, the way those things have been going crazy, it's up, like I said, 20 points. All right, so this is one of the reasons it was probably spinning here. So you can see this is the market profile composites that I used. This was yesterday's trade, right? Well, it was sitting right at the top of this thing and it's finally busted out. So that's actually positive. I don't want to see this thing come back in here, right? That's not the most recent composite, but this was an important composite where it bounced off the other day, got in yesterday, basically held this prior one, which was also the point of control, bounced off of that today, and now it's just got out of here. But it was spinning basically right at the tip of this. So now that it's out of here, hopefully this thing can get rolling, and you can see the buy volume starting to pick up. Hopefully, this is the CVD cumulative volume. Hopefully this can head it to the red lug. So the way I trade, I get out, I piece out it in important areas. Is this a super important area? Well, it was. I probably would have got out of a couple here with a very tiny win. If I even, this is what I'm talking about, knowing your areas before you start trading, right? I didn't even realize we were right here, or I probably would have got out of a few. But now that it's punched through there, I'll watch this closely. If it comes back, I'll probably get out of a couple. But right now, I'm going to try to hold this. So other than that, there's really nothing here. There's no market profile composite. This is a single day. The lugs. So the way I trade, I'll get out of important areas. And these are my important areas. You may have your own. You can adopt mine or have your own. These are mine, right? This is the trading edge you get access to. Trading in the Zone. This is directly out of Trading in the Zone, book by Mark Douglas. I show this literally every day in my webinar, in my trade room, and I force people to get this tattooed to their forehead, or at least read it every morning. I pay myself as the market makes money available to me. So these are all the areas where I will piece out of trades, right? That's why you want to be trading multiple contracts too, because you don't want to just trade one ES And then you're like, it gets to an important area. You're like, well, okay, I guess I'm out, right? Or I'm going to ignore that area, and then it comes back on you. If you're trading 10 micros, you can get out of 3 at an important area, and then another 3 in another important area, and still have some on for the bigger move. So you're doing yourself a disservice if you're just trading one big contract, in my opinion. But anyway, pay myself as the money makes available to me. Ludwig levels, market profile, composite, highs, lows, POCs. So we just looked at a low high that it busted through, but I should have probably been out of a couple there. VWAP, extreme standard deviations. You know, I'll get out of these usually only if there's something else there. Confluence, so one of these other things on top of this. Spot gamma levels. So you can see here we're actually heading to a spot gamma level that I will watch very closely. See here, this 4150. If this can't push through this 4150, I'm getting out of probably half of these contracts. Usually it's a third, but like I said, I should have already been out as it struggled at that market profile composite. So if this gets up to here, I'll get out of half, and then I'll try to ride half to the red lug. Those are my main, because I know how powerful the lugs are as support and resistance. So then I'll let the other half run all the way to that red lug. I forgot the price. We'll look at it here in a second. So it's either red lug or an opposing volume event where it gets the ATR out of there the other way, and I get out of the trade completely, and or a stop out. That's how I trade, and then I just let it play, and then I don't get freaked out by the algos running you guys ragged, right? It's like I know what to expect. Very rarely do you get straight beeline moves, right? It's usually because the algos are 90% of the trade in here. So if you understand that, you accept it, you're not panicking. You know the areas that they have to violate for you to be wrong, right? And then you piece out in important areas and then let the trade work. And that's how I trade. Let me see if there's any more questions. I got to go here in 4 minutes. Hopefully JD Trades answered your question. It was loud before, but okay now. Scott, were you a floor trader 20 years ago or trading electronically back then? So I worked at the board of trade. I wasn't a trader. I was an ARB clerk, which is 1,000 times more stressful than being a trader, because you're working for a broker. You're watching hand signals from your broker that you're watching. So I have a broker that I'm working for, not from a broker, the house. So you're watching houses flashing orders, right? It's the big money, like we're talking here, the icebergs. Those guys will flash in orders with hand signals. You got to turn around and tell your broker, your boss, what to do. People are screaming. I mean, it is absolutely nuts. You've seen like Trading Places. That's exactly how it is, right? And if you make a mistake, you cost your broker a couple $100,000. So it is 1,000 times more stressful. So if you read Enhancing Trader Performance, that's this book here. That's on my website as well. This is Dr. Brett Steenbarger. He's one of the top trading psychologists, probably the top trading psychologist on the planet. Well, he sat behind me for a year, so he documented my, how I made the $10 million or $15 million in the couple years that he was behind me, watching me. But anyway, you can read my story in here. So I literally said that experience on the floor as an ARB clerk got me battle tested for trading. So I was there for 4 years at the CBOT, Chicago Board of Trade. I was in the bond pit and the 5-year option pit where I started, and then the bond pit. And then I started trading electronically in 2001, like literally a month before 9/11. So that's right when I started. Where's my target? So I was talking about my target. So I'll get out of some here. So I'm always out. So say another event comes in here, which probably will. You're probably going to get a stop run here. Then I'll draw my event and I'll trail my stop to that newest event. And if it comes back out of there in ATR the other way, I'm out of the entire trade. Other than that, I'm told you I'm going to get out of half at 41 at this spot gamma level. So remember, this is the cash price. The futures price is about 11.5 or 10.5 points higher. So it's 61 futures, 41.50. Spot gamma levels are incredible, and I just use them very basically because these are where options traders have to hedge their positions. So you can see this basically held this area. I mean, it went a little bit lower, but it held, right? So if you were short, you watch this area and you're like, okay.
NQ stocks stopped by NQ, 215 contracts.
All right, so NQ's rolling, ripping and rolling, but so now I'm really happy that I just trailed that stop. This is exactly what I was saying. So I was short off of this event.
According to the Washington
This event came in, so I was able to trail my stop. My original stop was way up here. This new event came in on my short, so then I trailed my stop to there. I got stopped out. I took a very small loser, and I avoided this move up, right? Because of the volume events, not because I didn't want to lose money in certain instances. So anyway, I'll get out of a couple here, or half there, and then I'm going to be watching the lug this can get up to the red lug, 68.50, I'll be out of all of them unless it pushes right through. You know, this is where you want to use your tick strike or market pulse. If you see this stuff going crazy and you see it gets up to that red lug and you see nothing but blue bubbles, well, give it a chance to get through there, right? You don't want to be a seller like right here. You can see it's been nothing but buying here. So if this was like the red lug, you don't want to be, you know, why do you want to be a seller if nobody else is selling, right? So give it a chance, and then you start to see multiple red bubbles. Well, then get out of them, right? So I'll be getting out here,
4-week bills total
and then I'm doing the same thing right here. So if this gets up here,
$million.
I'm going to be using this, the bubbles, obviously, my tick strike, and my market pulse, and I will be able to see. So if this gets up here and you don't see this market pulse doing this with that yellow little dot, that means there's not the heaviest buying for the last hour. Well, that's telling me something, right? So we're here right now. So let's make a judgment right now. I'm gonna get out of some of these, and I gotta hop off this webinar. I'm gonna get out of half of these. Got multiple, 2 different. So I gotta go. So I'm gonna give this a couple more seconds, and if I can't blow through here, I'm gonna get out of. I'll get out of half, and I'll just keep my stop in for the rest of them. Come on, you can do it. You can do it. Come on. So just watch these bubbles, right? If you did, okay, now let's see what happens. There they come. Out of half there. The other one, I'm out of half there. I thought I had double size on. I guess not. Screwed that up. My millionth mistake in my life. All right, so I got out of half there. I didn't quite get there, but I got to go. And this is what I'm talking about. I got pretty close. Guys, don't be splitting hairs trying to get another, 3 ticks. That was close. Here we go. So you see how you can use this stuff? Did you see this going at highs? Did you see peaking on the market pulse? No. This was still going off a little bit, and that's not a good sign either. So I got out of half. Now my stop is where my original stop is, but if I hear a volume event, then I'm out. An ATR below there, I'll plug those prices in my spreadsheet.
S&P Iceberg Sell ES 701
I knew
contracts.
this would happen the minute I tried to leave. All right, so this is what I'm going to do here. So this is how you trail your stops, not because you don't want to get back a certain amount. Well, first of all, look at that. See, that's real selling for the last hour coming in. Now you got sell ice here too, 2,000. That's important information. I don't know if you guys realize that, but it's kind of
S&P
important to know.
Iceberg Sell ES 705 contracts.
3,000 sell icebergs. Look at the selling coming in. How'd that spot gamma level, dude? Pretty good. All right, so this sucks, but this is trading, and this is my point. You can see why something's happening. You're not just sitting here holding the bag like, what the hell just happened there? I thought, where are all the buyers? Why is this happening? Well, why it's happening is because 3,000 sell ice just came in the market, hidden sell orders. You don't think that's important in your trading? Then you're in for a world of hurt if you don't have this information. Is what I'm telling you. 41.55 down to 41.50 is your zone. Come on. Why is this thing spinning? 41.50.
NQ Ice Iceberg by NQ 153 contracts.
Here's 5.53. So now here's my new stop. All right. So if I was long off of this zone, I'd stop at 43.75. So I just saved myself 11 points of risk. So what does that mean? It means I'm just trailing my stop now in ATR, just outside of an ATR and 15% to be exact, outside of this zone. And I know it's in this prior zone, but I'm just getting out because I got to go anyway. So that's where my stop goes, based off a new volume event, not based off of, because, oh man, I just had my car payment and I just gave it back. I got to get out. Market doesn't care about your car payment. What does the market care about? Volume events and volatility. If you guys can understand that, you can do this for a living. Okay, let me put this in, and then I got to go. What did I say it was? 43.75? Can't remember what I said here. 43.70. No, sorry. Yeah, 43.75. So in this case, I will move it just out of this zone, at least that stop run zone. I'll make it push through here, so I'll put it at 42.50. So you see this yellow zone? I'd literally be stopping out right smack dab in the middle of this thing. So I'm putting it.
Russell Ice Iceberg Sell RT 154 contracts.
So I say myself again, 10 points of risk if it comes all the way back on me.
Russell Ice Iceberg Sell RT 151 contracts.
All right, you can hear all the stuff firing off. I don't have time to cover it today, but guys, it doesn't matter what market you're watching. It's the same principles. Again, I do this twice a day, every day in my trade room. You can come in there and learn it. You have access to 500 plus prior webinars that I've done with this exact thing. You can go back and watch them. I have my data feeds that you can have for the last 3 years that you can go back and replay any day and practice, which you need to practice. I'll leave you with this. This is the thing I posted in my trading room last night. This is Dr. Brett I was just talking about. So important. If you think, hold on here.
In 10 minutes time now we do get the 4-week bill
The link for
auction
this,
for
I'll
the
put it in
US
the
selling
YouTube channel.
$35 billion of 4-week bills with a prior bid to cover of 3 to 15 and a prior high yield
This is
of
the one
5.37%.
Oh, that was this one here. So important. You have to practice your trading. Hold on, let me make sure this is it. I gotta put this in here. So that's Dr. Brett I was just talking about. I would highly recommend you follow his blog because he is, like I said,
So
the
according to a Fox
top
reporter
trading
on
psychologist
Twitter,
on the
House
planet. And
Democrats
trading is
are now
obviously
speaking against
the
the GOP going on recess over
psychology
Memorial
and
Day,
trading is
despite
obviously
looming debt
the biggest
ceiling,
aspect,
Jeffries
right?
To speak
All right, guys. So hopefully you got a little bit out of what I was doing there. Trade worked out. We watched how this came up to an important area, and it was just I used the bubbles in my favor. I saw this market pulse wasn't doing this yellow spike. 70% of the most buy volume.
Resolved, and everyone that wants to think you're going to lock up something, you can't bank anything until.
I use that stuff to help me get out of half my trade. So this could come back. That's fine. I still have some on. If it breaks down out of here, then I'm out and I have a small profit. All right. I will. Thanks. Sorry for the nonsense to start. That was a little crazy, but got it going. Hopefully you guys learned something. All right, I will see you next Thursday. And
Russia
in
to
my
cut
trading
oil
room.
loadings
Thank you.
from Western ports by 6% in